Just went ahead and took this short, a bit of a double top. I'm going to move this order up just a tad. Chances are we'll see this 20 moving average come up and act as some sort of support. So we want to have our first target right above where that will be. In terms of stop, I'm going to go ahead and bring my stop down to 8071. See if we can't get a little bit more of a flush here to get that first target out of the way. I'm going to go and bring my stop down a couple more ticks. Let's see, actually we're at 7.1. We'll leave it there at 7.1 for now. Right above that 7. It's been kind of a grind up today. Excuse me, just grinding action in general. We weren't a part of this, so we've just been patiently waiting for our next trade. We just got target 1 filled. In terms of our stop, at this point we can go ahead and just bring our stop up here to 8067. About three ticks past our entry. No use risking any more than that at this point. If the trade's going to go, the trade's going to go. So right now the stop will stay here at 3 ticks past our entry, and other than that, like I said, once our second target's been filled, then we can work out our third entry, our third exit, and chances are we'll bring that down below this first hour high from the morning. I'll scale this down so you can see a little bit better. This yellow line right here, I just extended it out, but that's an indicator in the background, just signifying the first hour high. So we can actually do that right now because we don't want to exit that last position. On an order, we want to exit it, or on a limit order, excuse me. So we'll bring that closer to that 200 moving average for now, and we want to move our stops to exit rather than exit it and kill the trade prematurely. So right now that second target is right. It's gonna be close right there with that 20 moving average, but we want to be ahead of that 20 moving average. So, but we'll see what happens once we get there. Yeah, you could easily see us just kind of grind into that 20 and then explode up to the upside. So that's what we have to be careful of course. But even at that, our third entry, I never want to just kill the trade, so I'm not going to bring up my third entry to just take me out at a certain price level. That's my runner. That helps to add on to your gains. So the 1 and 2 are part of the trade. The 3 is the bonus. You could think of it in that way. And what we don't want to see is price kind of get that jolt of action, and then we slow down to what we were doing before. That's not what we want to see. So we want to see this make its move, fairly quickly. We don't want to sit around and wait for the move. We want to be right in position to catch that quick move and then be done with the trade. All right, here we're going to make sure we want to have our, we should be fine here, order above the 20 moving average, because chances are that will act as some sort of support. Now what could happen here is, and we have to think about this when we're trading, because obviously moving averages are lagging. If price comes up, then that will actually put our exit order below the 20 moving average, and that'll bring the 20 moving average up. So we want to tick up every once in a while. What I mean by tick up is right now we're at 8046 on the exit. I'm going to bring that up to 8045. Whoa. Excuse me, not 8045, 8047. Okay? And what I'm doing there is I'm just simply ticking up. So as the dynamics of the trade continue to change, you need to be aware of that. You need to continually adapt. And so there's no set intervals for that. But for me, maybe every 15-20 seconds I may tick up if the trade hasn't flushed through yet. I'm going to go ahead and give it another tick. And like I said, this isn't a set interval. This is just playing what I'm seeing. Because at this point, and we just got filled on that second target. At this point, the longer and longer you wait, okay, and the longer and longer price has time to sit at a certain price level, or to even head higher. If price heads higher, that 20 moving average is going to inch up just a tad, enough to prevent your order from being filled. So you have to think of it in terms of what's actually happening while price is moving, because we all know that indicators, they lag, and there's no going around that. So you have to plot out the direction or the movement or the placement of an indicator before it's happening. And so right now we came down to a level and started to show and act. Real quick, I'm going to actually bring down my stop to break even, to that 80, break even plus one tick, so 8063, one tick in front of our entry. So price came down and they started to act as whatever their price level was, I'm not even sure, but it started to act as support. Okay, so we know that we do not want price to continue higher, because that'll throw the trade itself off in terms of exits. So on those first two orders, I'm always looking to adapt and to I don't want to say skew, but you can say skew. You're skewing with price. Okay, you're kind of I'm trying to, let's see. I'm trying to think of the best way to explain this. I don't know if this is going to make sense at all. I'm kind of confusing myself here, but basically, I mean, you just have to make sure that you're aware of what's happening in terms of price and how it's going to affect that indicator that you're using, as support, because that will change. It's not going to be at the level that it was after a few minutes, after a few ticks of price. It's simply not going to be the same. So 1 and 2 have to be managed that way. 3, simply a runner. Let that baby run. Work on those extra profits, and you should be good to go. Oh yeah, so I mean, of course, yeah. So a lot of times, I know that this used to happen to me quite a bit too, and it still does every once in a while if I don't see it correctly. But price will come down to about a tick to an entry, or excuse me, an exit, and never filming. And that was just me not flowing with um, the direction of the indicator, or setting out a map for what the possibilities of that indicator to do. Because once it gets there, then you've got buyers coming in to step in and try and buy. They buy out the 20, whatever they do. I'm not too worried about what they do. I'm aware of it, so I adapt to it. Yeah, so right now I think we're in great position. If it comes up and knocks us out, not a big deal, but I think we're okay. Like I said though, if not, no worries. We're not going to change our third exit. We're not going to move it any higher. We could move it out of the picture if we really wanted to, or we could wait till later. But for now, we'll leave it right here above that 200 moving average, because chances are, in terms of that third exit, that 200 moving average normally tends to be the time. If it does run, it normally becomes that that pretty significant bounce area. So we'll leave that where it's at right now, and we'll play this with our stop. What I know most of you guys know what I mean by this, but what I mean by that is we're going to bring our stop down to lock in profits rather than end the trade prematurely with the set exit order for that final contract. Yeah, it's correct. We could easily see, if I just draw out the rest of this line here. Now we could see the 20 moving average kind of do its thing here, and we could see price kind of grind into it, just kind of grind off and up and down, up and down, up and down, and then get that push. But I couldn't tell you if that's going to happen or not. I'm just playing the trade as is. And we just got taken out for that last contract plus one tick.